Okay, so hello to everyone who is watching the recording. I hope the stream is all right for everyone watching live. Recording is on. Just let me know if there is any problems with my sound or screen sharing. But as nobody is complaining, I think it should be all right. Okay, you can spend time, or not spend time, but send all your ideas for today's stream. I think everyone was already around. We're gonna spend some time covering the market in general for a few minutes, and then everybody supposed to share a topic, which is the most difficult topic for you right now. And I will cover this as long as it's understandable. But you guys, you send your topics into the chat and I will start covering the market in general right now. I'm in crypto. I'm of course still spot exposed. I have still my thesis is still that we have a month or two left of upside potentially. And I'm still spot exposed for that. I took big TPs on ETH last week. We talked about this. And right now, I'm more short from the trading perspective, just because I caught some nice ones. We were also talking about this local short here on ETH live last week. I think it was on the same day actually when I took it. And I'm still in this one. I took a ETH short here with the trader section, TP'd here 20% and another 50% down here. And got stopped at break even after. I wasn't filled at this one again, which still provides a nice short opportunity in my opinion. And overall, I felt like a little dumb ass yesterday, cutting my long on Doge around here. I mean, it wasn't a big loss or something, but I cut it and then it pumped 7% right after, and this is not fun to watch, of course. But overall, I'm so low time frame to mid time frame, I'm still quite a little more bearish just because the sentiment is so good and everything. And my intuition tells me to be not overly bullish right now, but as I said, I could be wrong. I mean, I missed this whole 7% move right here because of my bias, so I'm not always right, but you guys don't see my screen. Okay, sorry for that. But actually it should. Discord says, to me at least, it's shared. What about now? All right, sorry guys. Always some technical issues, but I will learn. So I learn every time a little bit. So again, what I said is, I mean, you guys heard what I said. I just showed the BTC chart here. I'm still short from here. I'm still short from here locally. Of course, I TP'd already on those positions, so it's not like on full size, but they're profitable. They hedge my spot backs, and I'm a little dumb ass for cutting my Doge long here. You see it pump 7%. Of course, I don't chase or something, but because, I mean, cutting something around break even because I think a nuke is inbound and like take a small loss is still no big mistake to me. I mean, it wasn't perfect, and of course it wasn't the right decision afterwards, but I rather manage my risk too often than too less, and I didn't chase this. I tried a little long here, low time frame wise. It didn't work out like I expected. Now we are already almost retest this whole move, so I'm not so sad about this decision. It could have worked out better, but you can't be right all the time. And so yeah, my bias, lower time frame, mid time frame is still quite bearish. Why? Because BTC is at range lows, which is good as confluence for longs, but overall, I would like to see this low here swept because it's a major low. It's more or less something like a 3 drive or a double bottom into this demand here, into the Euro BTC level, which was touched slightly yesterday, but I wouldn't consider this like taken or something, especially considering because it's 8-day. So this could act as a nice confluence, sweeping the range loan on BTC, USDT, and maybe take some more key levels on alts for bigger longs, which would be either another test here. I mean, this would be, of course, total devastation down here for most people. So yeah, I mean, if there is a really big bullish leg left, like a really bullish, like for example, Doge goes to 30 cents or even higher, it makes sense for us to sweep this low again, take this bigger key level here, which is just a partial, of course. And on ETH, we also have levels below, which is this daily here and the 3-day or something here. So as said, it makes sense to me that we just go down a little further. So I try to add two shorts here rather than two longs, especially on ETH and BTC because we're in higher time frame premium. And I try to long those key levels, which is here with the CME gap, and ETC Euro took the 3-day. So more or less, there is a key level. There's a reason to be long here. And so everybody that is long or was long, there's certainly not a wrong choice. And I could be definitely wrong of not having a longs running from here. But that's all right. Either way, I'm good exposed long crypto anyway, most of the time via my spot backs. And as said, everything is in higher time frame premium. So I'm rather a little more defensive with my risk than to be offensive. So yeah, as said, trying to catch some longs if possible. If not, there's also no problem. I won't chase. I just wait patiently for another opportunity because the market is not going anywhere, especially trading wise. I mean, spot wise, I want to be exposed from those levels on some altcoins because those opportunities don't come around every week. But trading wise, there's always something to trade. There's so many different tickers, markets, and stuff to do. So I don't need to be in such positions if I don't like be completely behind it. Even though, as said, it was the wrong decision to cut my Doge long here. It's, in my opinion, rather wise to manage risk more defensively than being too offensive. And yeah, there's a lower time frame level. I might trade this, then maybe a retest if I get confidence from other charts. We will see. Many things to do. Other than that, confluence, of course, from majors. We have ETH, like ETH BTC in this 4-week and 2-week level. Confluence is here. We have total in this mid time frame level here. Total 3 actually. We have total 2 and some levels, a smaller one below here. So there's confluence for being long. Definitely not the worst choice to start looking for longs here. Local validation, and just understand the context. It's not like a most optimal long level where you allocate yourself like a high percentage into the market. It's rather something with local TPs and like more defensive management, in my opinion. USDT is at the weekly high here of this block. There is some liquidity left, the 0.5. So also confluence should we hit this. Yeah, same here, filling this FVG, taking some liquidity. Same here. The Dixie is grinding around at the 5-month level. A relief bounce from here makes sense, but overall structure is pointing down. Even though this is locally at least taking this high out, creating high highs. But I mean, this is looking so bullish, so retail will probably consider this rather bullish than bearish. Other than that, we have, let me check, we have the SPX, which has more or less lost the key level, in my opinion. I mean, we could still bounce from this little area here, but I thought either the 12-hour or this daily block here would act as confluence, which it did more or less for yesterday's bounce. But right now it doesn't show really strength. And so, yeah, it's probably not reacting from here. But we will see. Indices do act a little differently sometimes, and there's also some demand a little lower. But as said, I expect rather range here, maybe a third drive, a little later, something like this, and then off we go into the end of the year. And arranging in DC market is probably what we want to see, because this would free liquidity for other risk assets. Okay, so much to my market overview. Maybe we have the opportunity to see the slow sweep today live, which would probably give us the opportunity to long something. Time will tell. This definitely doesn't look too strong, and it's reversed more or less from this range low here. But as said, for a real like confluence, I would love to see this sweep. Why? Because this would make people a lot of people bearish, and would create a lot of sell pressure. And of course, this is what we want to see for longs. People are fearful, people selling. And I don't know if we talked about this last stream. I definitely talked with my mentees about this. We have this bigger range, in my opinion, which is on since we broke this to the downside. Even though we haven't entered like this range, I think the break of structure here opened up this as bigger range because we lost the upper range, broke this to the downside. Of course, this is still a bigger range right now, but I think this break of structure was telling us that we are entering this area again, especially because we weren't able to break above this and we trapped a lot of longs at those highs. So ever since this happened, I was more bearish in the market, and then you see people sharing those like statistics about how many people are short ETH and blah. Yeah, so sentiment is also rather bullish than bearish, and probably we need to see a little more fear, or we ignite a little more fear with breaking local structure here, for people to get more bearish. But time will tell. As said, maybe we see something spectacular today in the live stream, which would be nice. But other than that, this is what I wanted to talk about today, and I will spend the rest of the time to cover your biggest issues. So I start at the top, and just for you guys live, I read out all questions loud, not because I want to read them, but for the people watching the recordings, because those can't see the chat, unfortunately. I mentioned in the chart TPing, but more so mention your positions, when to move stop loss to break even, how much do you take for TP1 etc. Then I still struggle with identifying buying sell programs, something I'm not focusing on or haven't in the past. Good questions. TPing, yeah, okay, we take, so the question is difficult because it depends so much on context, and I find it very interesting that you yourself mentioned buy program, sell program, because this is very important to understand what we do right now, so you can understand if you want to push your position like a little longer because you're aligned with higher time frame trend. Because, for example, you take a long, you understand this is buy program, you wanna ride as long as much as you can, and then cut it or TP it once like sell program is hitting again, even though it might be just minor sell program, like not. So you have many opposing timeframes. You have a higher time frame uptrend, then you have a mid time frame downtrend, and in this mid time frame downtrend you have a lower time frame uptrend again. But overall, you just need to understand context and when to define a break of structure. And for example, I only define buy and sell program on higher time frame because this is where I make most of my money, where I trade my biggest positions. So this is, in my view, one of the most important questions. And people spend way too less time figuring this out. And especially looking, for example, look at the money tower edge. I mean, the breaker blocks and all that, and premium and discount, this is all great. And you need all this knowledge as well. But I think what makes his edge so incredibly powerful is that he understands when buy and sell program is. And I mean, the amount of like knowledge he has, or like how good he's able to predict the market in advance, like sometimes even a year or more in advance. And you don't see a lot of traders having this skill. I think he's probably the best one in like predicting the market in this way, this market situation and all that. And yet people trade his edge, but nobody spends a lot of time figuring all those puzzle pieces out, like really understanding the whole context and the whole game as was it is, the whole system more or less, because the market is so deeply tied to the system that you just need to understand all those things, connect the dots in all areas of the system, and then it started to make sense. And in according to the market, like just from a technical perspective, it's of course defining higher highs, higher lows, higher highs, higher lows, and understanding when structure is breaking, when structure is just faking a breakdown or a breakout. Like for example, here we had no break of structure, yet people were really bullish in this move, from this move, because it was all-time high and sweep and we go higher and blah. And people don't care about the reality. People just project their bias and their dreams and everything onto the market. And it's so funny. Like Monitor also posted the bear from from Elon. People give this picture so weird interpretations, and I really don't like this stuff too much, because until you like have so much data that you really understand it on such a deep level, it's usually just your bias. And I mean, this is a bear on Mars with a rocket in behind. So you could say, okay, there's a bear and there's a rocket, and everybody sees what he wants to see. But if you understand the whole context and like that the market is most likely to top soon, I would rather focus on the bear. And still, it is my bias in the end. And so I don't like to focus too much on those things from whales, because as said, I just don't, yeah. Looking at people, I mean, there are so many numbers, whales are posting so many numbers, and suddenly since like early this year, every single fucking number a whale posted related to the market, or or a big account posted which is related to the market, every single number was suddenly important. There was this 114, 118, and this and that and blah. And I mean, Elon Musk posted this 123k, which more or less was our perfect rejection from here. And this was 123, like Pit on Diablo, this computer game or whatever. But I mean, he's posting so many numbers, and this one number fitted, yeah? And so many whales post so many numbers. The question is always, is it really this number now? And you only know afterwards. So I really don't see a big advantage in like giving this too much, especially this numbers thing and interpretation stuff, especially if you don't have a lot of data collected for this. But yet it makes sense, and of course you can find an edge in there, and it makes sense to study all this and play Sherlock Holmes and connect the dots. But this is, in my opinion, what most people lack. And to come back to your question, like understanding when a buy program and sell program is really putting the whole context together, understanding where we are in the cycle, where we are in the move, what is leading the market, what is like majors telling us, not just crypto, but also stocks, what are commodities telling us, what is the dollar telling us, money rotations, the whole game. And then it will suddenly be easier to know when to take profits and all that. And when we are in higher time frame premium, like we are on ETH right now, it's just logical to take profits. But let's take ETH as prime example for that. So if you take longs in this area, like, or also in this area, like after such a move, you take longs here, you might want to hold on to them a little longer. I mean, ETH did pretty much nothing during here, but let's imagine you long through this, especially once structure broke here. It's wise to hold on to this idea and to this trade a little longer. And selling made the most sense from here. Why? Because we entered higher time frame premium. And it's pretty much very simple sometimes. You are more bullish down here and you are more bearish up here. So if you have longs from here, you start selling into this, and everything above the 0.5 is a good area to sell. And this is valid for every swing. And this was valid for this swing as well. If you take longs below the 0.5 on this whole swing, they were great swings, even though we rejected from here, even though this felt very bearish. If you took longs throughout this, or from down here, but for example, I took some here, pushing them as far as I can only made sense, especially if you have different longs on different positions and on different tickers. Taking, like, for example, a few profits here, a few profits there, it's all one big game. So I don't treat positions as single positions. And I know that beginners usually would say to me, oh no, I want to treat every position like a single one, but this is just not how I do it. And this is usually not the thing I recommend, because everything you take just either adds risk in one direction, or it removes risk, or it hedges risk. And so I'm more long crypto down here, and I'm starting to sell into something like this. And up here, of course, I'm more bearish. I would be stupid if not. I mean, sure, ETH could go higher. We could go to 5K, 6K, whatever. And I might be wrong. But just from a structural perspective, if I take longs up here, it makes sense to be more defensive on your TPs. And the thing is, this is valid for every single play you take. I mean, on ETH, this is, for example, it's a higher time frame position, but the swings are always the same. So if you're on lower time frame and you have a major swing and you take a low down on the swing, of course you should be more bearish up here, and you should start selling around the 0.5. And I can take my short, for example. I like to cover this with real positions, because then it makes the most sense to me. So for example, this was my swing when I took, the position is actually gone, but where the red line is, this is my entry. I took my position according to this swing. I shorted in premium, right? I shorted up here above the 0.5 of this whole swing. I could also take this, but let's take the whole swing. So it made sense to sell something which was shorting. And once we went below the 0.5 again, and then it's of course not just the 0.5 of the previous swing, but also, and even more important than the swing right now, which was the counter trend move, I short in premium of this swing, and then I TP into discount of this new swing, right? Because we retrace this is my new range, my new swing, I TP into the discount. And it makes, so removing the risk makes the most sense once we cross this line, and we either bounce from here usually, and if we don't close below the 0.5, you should protect your stop loss anyway, because if you reject from here and we don't break the 0.5 to the downside, it's very likely that we're going higher from here. If you break it to the downside, you should also move your stop loss to break-even, especially here in lower time frame. So either way, it makes sense around the 0.5 to either TP or at least remove the risk from your current swing. So this is the current swing, and we retrace it to the 0.5, and from here on it makes sense to remove the risk or TP. And I usually I started just like manually TPing all the time around those areas. But what I do now is I try to push my trades, which is not something I would recommend in the beginning, because this is very exhausting and you need a lot of time for this. As said, I do this all full time, so I have a lot of time to manage my positions. I would recommend to TP around this area. Maybe there's some liquidity here. Always a logical area for a TP. And then I, for example, I waited, and then I saw this higher high here, and then I said, okay, good, this might reverse here from the range low. So I TP here, which is then, of course, not as TPing here, but I'm not here for perfection, because this could also break down and I can like milk more out of this trade. Didn't happen. I TP 25%. I thought I get stopped, which I didn't, and it just kept on going down. I TP'd one more time here, and I TP 25% for two reasons. So I usually, my first TP is between 20 and 50%. If it's a high risk play and it's counter trend and it's not optimal and nothing, I usually TP more. And if it's more optimal, I TP a little less. Why did I just TP 25% on the short? Because I always like to have shorts running on crypto, because as I said, I'm always more long exposed, so it makes sense to have more shorts running from a trading perspective for me. And overall, we're in higher time frame premium at all-time high, so shorts from here are always nice. So I TP'd a little less than usual. Could have been the wrong decision. I don't know before. Nobody knows. But I locked in some gains. I removed the risk. Nice. And then it kept on going down. I TP'd actually another 35% here. So you see there's not so much left from this position, but it's still, or was it here? I think it was, no, it was actually here. I know this was from the, it must be from this one. It's a little messy by now. Sorry for this. And so higher time frame premium makes it more optimal to have a short. I like to hedge my spot bags, so I like to keep on holding to the shorts. If I don't have any spot bags, I probably could also TP more, but I see the whole game as one big game. So for me, it's not just one single position. For me, it's all positions together make my portfolio, my trading account, whatever. And you could argue that this was a counter trend trade because it's higher time frame up and I trade against this, but I know that this from higher time frame can reject quite heavily, which it did, of course. And so it's, even though it's counter trend, it makes the position more optimal because we are in higher time frame supply and or near higher time frame supply at least. And the lower we go, the less sense it makes to hold on to those shorts for longer. For example, I took a long here and I didn't TP until here, and I only TP 30% of something, and I pushed this trade as far as I can because I just knew we were probably going for this higher leg. We were in higher time frame discount, so it made sense to push this long as far as I can. And then, for example, I don't remember what was this. This was something like a 12-hour, or to have another example. Yeah, you see here this 12-hour partial and some other time frames and whatever, but I took this long. My stop loss was somewhere down here or something. It was quite wide. I tightened, I added something like I always do. And then my stop loss went to break even after we reclaimed this because I was just, I knew that this is going to be a good position because we broke structure to the upside. We faked out here. We created a lot of liquidity, and the cycle stuff and everything just told me that things are going to get higher. So I'm more defensive for moving my stop loss to break even. It was also a mid time frame to higher time frame position. And on such positions, of course, my stop loss goes to break even a lot earlier because it's way riskier and can just get wicked out, and lower time frame price action is very messy sometimes. Same here, 1 hour short. I shared this in the premium section, like completely detailed, the full analysis, what I did, every single step I take for entering such a position, which then reacted. I took a TP here. I took like 20% or 25. I took 50% here. And of course, after we retraced so much into the 0.5, my stop loss was break even after we touched this, because this was the first supply. It's a lower time frame position. Lower time frame is messy, fast. I want to have my risk removed. I want to have some money from the reaction and finish. And if it's a higher time frame play, I'm more relaxed. And if it's a most optimal higher time frame play, I even buy spot. And if I buy spot, my stop is never hard because it's always on the wallet, and I give it more time and I wait for closes below the level and everything because the level is just more optimal. But on lower time frame, the lower the time frame, the more defensive I play my plays. And I rather get stopped out at break even on lower time frame or mid time frame than taking a full stop for a not optimal play. But as said right here, of course, scaling into spot, not every little drop scares me and makes me cut my bag and blah. The whole context is so different here. So yeah, context is one of the most important ones for TPs, and context can only be learned by studying price action, live price action, old price action, historic, putting the puzzle pieces together, like figuring the whole trading game out as a whole. Like, what are the next steps that whales have planned? What is the market? What kind of phase we are in? And in my opinion, so this is what I did most of the time. I didn't even know what breaker blocks were, and I studied so hard all this macro stuff. And people usually don't like that, but I love that, to be honest. I find that the most interesting. And if you like putting the right pieces together, you suddenly start to understand that the whole market is repeating the same things over and over and over. And even if it looks different and it feels different, and of course the narratives are different and all that, and structure, it's just buying and selling in the end. And everything whales do, they just do for make people buy or sell. And so they can, of course, they manipulate, they deceive, they do all those things, but they have a certain playbook, and they just can use those rules from those playbooks. So they can't bend the laws of physics, which is in the market buying and selling. And so once you figure this out and really understand this, it gets a lot easier to know when to TP more or less. So Mercy mentioned the TP topic in student discussion, and I went with stop loss placement as one of the more difficult ones for me. And if you could cover some examples, yours or mine as well, and just talk your thoughts out loudly, and especially the whys, as I'd like to understand the mechanics behind it. I hope I did that. Of course, we can also look at plays of you guys. Just send me some in the chat if you have specific questions. But I think other than that, I answered all of those. Let me know if something is still unclear. Position management in general. Okay, this is a big one. The question is, where should I start and where should I stop? Because what kind of positions are we talking, like spot positions, high time frame, mid time frame, trade positions, leveraged, not leveraged? A little more specific would be good, probably. Last range in liquidity and what happens after. You said that in the discussion section, and I'm not quite sure how you mean this question, because I mean the last liquidity of an area of a range is of course the most powerful one, but the last liquidity of a range is oftentimes also the sweep of a range. So for me, for example, the last liquidity of, let's take a clean chart. This is already so messy. This looks better. So let's say this was a range. We tested the range high here. So where is my? So this is a range, right? And before the recent sweep, even though this is just a wick, this is a key level. Doesn't matter if there's a block or not, because this is a key level. Why? Because it creates liquidity once it hits. And in this case, like only looking at this chart, I could skip 1,000 time frames. I will find some blocks here, whatever. This is a liquidity area. And so my last liquidity here is either within the range, but more often than not, we either reverse from here. We don't even go to the range highs anymore, because whales don't want to let people out, probably. So if people are too bearish or something, they won't let them out. So there is some liquidity here, maybe. We reject from the supply. We don't even go to the range high. And more often than not, if we go to the range high, we sweep it. Why? Because there will always be breakout traders buying. And there will always be people getting more bullish, and especially all-time high sweeps are especially powerful because a lot of people are like, oh yeah, Bitcoin is in price discovery again, and blah, and now alts are ripping and whatever. So everybody will find a lot of narratives to be more bullish with this sweep. So and the same way works the other way around. So if we sweep this to the downside, which is also still, it's the same play. I could look for liquidity here. We reverse from here a little bit, but this little reverse, think about it. How bullish did you feel yesterday with this pump? how stupid did I feel that I cut my Doge loan? This is what makes people FOMO. And when people FOMO, they buy into this. And now we drop sharply again. All those people who bought here, and there were definitely people buying because the whole market was red, like TradFi was completely red, and crypto was like so green. So people bought here probably, and now they're underwater, so they're trapped, and trapped positions, trapped traders are like great liquidity. And if we sweep this low, a lot of people are going to have their stops exactly below this low. So this is also a liquidity area. The same way we sweep those highs, the same way it makes total sense to sweep those lows. And yeah, so the last liquidity of a range is for me the range low itself. And usually with a sweep, we take the liquidity there. But I think what you mean is the last liquidity of a range in the sense of a hidden level or something, which is then if you have, for example, on indices or something, BTC might not be the best example for that. But let's take the 6 hour level. And of course, we have this block here. So more or less, this is the last one or not, or whatever. But let's imagine we have a lot of levels up here. We have this block here. We have another hidden level here. And this is our last hidden level. This is, of course, the most powerful because this is, first of all, it's in the discount. This is in the discount and this is in the premium. And it's the last level of interest. So if we don't sweep those highs, like if we don't take this key level here, this is our last level of interest. And the higher we go, of course, the stronger it gets because there is no reason to go. There are less reasons. The higher we go, the less reasons there are for us to go even more higher, also higher. Yeah, so this is probably what you mean. Let me know if that made sense to you or if it answered your questions. Maybe a new question so far in the course, but how do you usually define supply and demand zones? Hidden order blocks, OBs, and so are clear, but actual zones, and do you usually just take those for spot plays? Yeah, this is a good question, but it's also a pretty simple one, and I'm not sure if you're happy with the answer, because like to understand supply and demand, you just need to understand how whales behave. And for example, if you use this is demand, right? So I could mark this whole area and say, good, this is demand. So if you go down here, it's very likely that we at least consolidate, maybe react a little and then break it down. Then I can refine within this area, like looking for untouched areas. So what we do usually, you need to understand that we trade a really refined edge. This is what people don't get, because if you learn something, usually you start at the beginning, and this is supply and demand, all those basic rules. And with all the knowledge monitor shares, a lot of people start at the end and they play the most refined edge without really understanding what they're doing here. But to really understand, there are also good videos to supply and demand and all that, but it's just base, pump, base, pump, base, pump, base, pump, base. And now is the question, is this going to be a pump again or is it not? And if this is breaking down, and especially if we break this here, this is not base anymore, but this is like distribution. And then we have base, drop, base, drop, base, drop, probably in some fashion. And every accumulation or distribution is more or less supply and demand. Of course, you want to refine it because you don't want to long in this 10%, 12% area. You can, of course. Oh, there's a position. Funny. But this is demand. And to refine it even more, this area is probably the strongest demand. Why? Because it gave the strongest reaction from here. So this would probably the first refined area. And if I skip through different time frames, I will definitely find a block here. Hopefully. For my example. Yeah, you see 4-day. And this block is nothing more than this consolidation we saw here. Like this little consolidation, like attracting buyers, sellers, creating liquidity on both ends, making whales, give whales time to load the positions reload. This is actually the block in the end. And the big FEG here is the move. And the stronger the move, the stronger the demand here. So I expect a little reaction from this demand. But sometimes we also sweep those demand levels or supply levels if it's the other way around. Why? Because people are looking at this. And the more obvious a level is, the more people looking at it, the more likely it is that it's not going to work, because if everybody sees it, it's not creating liquidity within the level. This doesn't make sense for whales, because if they want to buy, they need sellers. And if, like for example, not a lot of people look at the 4-day, but let's imagine this is a very obvious block, like on the 1-day or something. A lot of people probably want to long this, and so and I'm not saying this is probably not the best example for this, but let's imagine a lot of people want to long this. So everybody wants to buy in this level. This means there's not enough liquidity for whales to buy, and so it makes more sense for them to sweep this, create sellers. People who bought here have their stops here. They create sellers, sweep up those sell orders, and then they reverse price. This is why more hidden is more better. And this is why all this basic knowledge, which a lot of people still don't have, because this, as said, they start with the most refined edge and start instead of starting at the base. Yeah, with the base. This makes hopefully then more sense to you now. And as said, I consider this whole area here a demand, and then I tried to refine it down further, and I couldn't here. Of course, I could if I wanted to, I could probably. And then you have this as well, and this is also something people see, and so this is tricky to trade, and that's when different tickers come in, like the Euro chart, which has a much more cleaner level. Then order flow comes in. I can check what's happening in the level. If I see a lot of people longing this, I definitely don't want to long this. If I see a lot of people like getting bearish because this range low breaks, a lot of people shorting into this level, and then it's a 4-day, almost nobody looks at the 4-day, I'm going to be long from here. And a lot of those things come then together for me to define if the supply and demand is good. So it's more hidden. Is it like something whales? Is it, if I'm a whale, what would make sense to me from here? And then once we hit the level, I look at order flow. If my whole idea still makes sense, or if like people just don't do what I expected them to do. So if we sweep this low, and a lot of people long into this because they say, oh, I long the sweep low, the sweep of the lows, the confluence or the setup gets less confluent, so it's not as optimal. And so I either play it on low risk, or I don't play it at all, because there's nothing lost by just taking a trade. Of course, it could reverse without me, and then I look at it and feel like a dumb ass because I fumbled this play or whatever, but there's really nothing lost. And I don't have a problem of being like more or less sidelined, at least sidelined on like semi-optimal plays or whatever. But of course, on something like this, I want to be exposed. So I'm definitely, this is context for me, different. This is like premium, not optimal, very defensive management. Nuke into this, even though we didn't take this level here, I was giga long out of this, just because everything made so much sense. The whole context was correct for being long, and it certainly isn't here, not as optimal at least. Stop loss topic is fine for me, by the way, answered well for me. Also, it's a process, and I figured out anyway, especially with the help of you and Albert provided during the last few weeks. Yeah, that's great to hear. Very glad to hear that. And yeah, and a lot of things I can talk to you, I can tell you those things 10 times over and over and over, but some things you just need to experience yourself. And sometimes I still need to think about it myself, because so many things become intuitive at some point. You just do the right thing because you did it for so many times and so often. At some point you just feel it more or less. In the beginning, your feelings are like tricking you all the time, because the market is designed to exploit your weaknesses and your feelings. But at some point you can trust your intuition again. And as said, of course, sometimes it's wrong, but most of the time I just do what I do, and I don't even think too much about it. It's just when people ask me, if I need to explain it, this is when I really understand sometimes what I'm doing there, because it just, as said, it became very intuitive. What can the last liquidity look like? BB, OB, EQ, highs, etc. And when we say last liquidity, what time frame are we talking about? Yeah, like I explained, so it can be everything. Like in the BTC area range here, it can be, this can be the last liquidity, this can be the last liquidity, or a sweep of this high can be the last liquidity. It all depends on context. And for example, here the context of a sweep makes just so much sense, because why? It will create another all-time high. It will create another higher high, a breakout. So many reasons. We want to have, we are at higher time frame premium, and we want to have people bullish, right? We want to have, so whales want to make people buy. This is, so if you're a whale, you need to think like a whale. You want to have a lot of buyers here. So what do? You create the impression of higher highs. This is why a 3 drive, for example, works so great, because it looks like a higher high, a higher high, a higher high. Oh, nice. This is like, it's going up forever. Great. And so that's why the last liquidity is probably a sweep of those highs. But as said, I can tell this could be the last liquidity. But if you take positions here and you have like a short here, and you have so many liquidities higher, and you say, okay, good, then there's a level, and there's a level, and there's a level, it's probably not that great to take a level down here. At least you should like treat it as a high risk play and manage it defensively. You can trade all levels. So there's really nothing against trading levels down here, local invalidation, 15-minute level, whatever. But of course, understand the context and what you trade. And the same thing is for longs. If you look at the whole chart, zooming way out, look how many liquidity levels are below. There's FEG to fill. Here's one, here's one, here's a level, here's a level, here's a level. So taking a long here is certainly not that optimal. Like I said, of course, the sweep low of the range can be targeted for a long, and then you make it like this or something. But you shouldn't look, your trade shouldn't look like this, more or less. Of course, this can happen, but it's very unlikely. So your trade should rather look like this, local TPs, according to context. And of course, if you take positions down here, your stop loss might be a little bit wider, because the setup is just so optimal down here. And you target maybe range highs, should this be the all-time high, or maybe because you understand the whole context, you target even higher levels from down here. But as said, the lower you go within the range, the less liquidity below, the better. Because if there is still liquidity below you or above you, it's still like a magnet. So there's still a reason for price to go there. And if there is no reason anymore, the better. So for example, back to our all-time high example, if we sweep this high, this is definitely the best time to get short, because above us there is nothing else to take. You understand? So there's no liquidity anymore. Of course, we could just go higher, but there is no level, there's no nothing, there's no real reason anymore for price to go higher. So the narrative of BTC going to 150, 200, 300K is already installed. People believe that already, and they now just need maybe one more sweep, 2 more sweeps, maybe not even a sweep anymore. Maybe this was just a double top and that's it. But from a liquidity perspective, if you take a short up here, this is the most optimal area you can take one, or here, invalidation above this. Because as said, after the sweep, price could go higher, but from a liquidity perspective, there's no reason for whales to invest so much money in pushing price even higher from here. And the same way at some point at the lows. At some point they have created so much selling. Why would they wanna buy at some point? They wanna fill up their bags. They need to support price with their buying at some point, because they wanna buy themselves. And so they support price automatically. So at some point they will support price. And if you understand the signs, and if there is not much below, like for example, on higher time frame, it's a little bit tricky, because there's always something below. I mean, if I zoom way out, we could all expect PTC goes down to $1 or something. But then it's about context, then it's about order flow, then it's about the real world situation, sentiment and all that, where you just know at some point it's just time to buy big. And you see we have the same situation here: drop, base, base, pump, big base, pump, base, pump, base, pump. So all of those levels could be considered demand. Of course, we want to refine them a little bit, but this is a demand base, this is a demand base, and there are of course smaller ones. So this is technically also a demand base, but let's like mark this as base out. So this is more or less a big base. Yeah, now it gets a little bit too nuanced. I could, if I, like for example, this time frame, it's rather all of that. And then you refine those areas, because you certainly don't want to use this as your base right here. And as said, the lower we go, within this swing, the better, the more optimal your level gets. This is what last liquidity of a swing means, because there is no reason for price to go higher or lower from this point from a liquidity perspective. I actually tried to analyze the low time frame pattern there, and it was like, nah, that isn't strong, weak breaks, weak first swing fire pattern, as you also said in the student discussion when I brought this up. We're talking about Bitcoin, right? Yeah, so we're talking about the 2 hour short probably. Yeah, and lower time frame, if you understand the whole thing, like if you understand high time frame structure, it's the same thing on lower time frame. It's messier, it's more manipulative, it's faster, and yeah, but it's the same structure. It's just buying and selling, and you just look for weights footprints. BTC to 1 million next sweep, I can already imagine the news. Yeah, so there doesn't need to be a sweep, but if there is one, I wanted to trade the sweep already, but I was asleep, and I don't like to trade those sweeps on limit orders, even though in this case it would probably be would have been a nice choice to do that. But overall, I definitely would have shorted this. And so there doesn't need to be another sweep. It could be a double top like here, but 3 drive, a bigger one maybe, or here a smaller one. Whatever it is makes sense. If it happens, I'm gladly going to scale into a bigger short here. If an hidden order block is wicked into before the FVG, that makes a hidden order block, it becomes a partial breaker block, right? So hidden order block and breaker block is the same thing, by the way. Then if this partial breaker block is hidden behind 2 FVGs with no further wick than initial, before the FVG we got a 2 times hidden partial breaker block. Could you share maybe an example for that, because I'm not quite sure if I completely understand this whole sentence, but let me read it again. So to have a simple answer for your question, every untouched block is an untouched block to me. And if it's a naked one, then it's still a block. It contains liquidity, more or less, because even though it's a small one, even though it's a mid-low time frame, whatever, this was a little demand or supply, a little consolidation. Doesn't mean it needs to react, but an untouched block is an untouched block. If it gets then skipped with an FVG, and even if it's higher time frame and it's a partial block, like for example, we have this on Doge, more or less. I think you mean something like this. So that's it. You see, it's wicked from here. It's skipped, and then it's touched from above, and this area is still untouched. And I consider this still a liquidity area. because there is still liquidity because it was skipped. This whole area was moved through so quickly. It's also in the discount of the swing. A lot of people are looking probably for something lower. And so I like this whole area, but I also see the demand here, and we could also just wick into the demand. And so I play those plays oftentimes a little wider because I consider them not as optimal as untouched ones, of course. I hope this covers your question. How to meditate? Yeah, there are many ways to meditate. There are guided ones, for example. There are good ones. I have this. I did like some meditation courses with this app called what's the name again? Headspace. I also shared a link into the group with a 30-day trial or something, which I used like for at least 6, 7, 8 months. And it's great because you can choose a topic and they will just cover some topic, maybe about how to sleep better or how to concentrate better or how to get rid of anxiety or whatever it is. It's usually then a little like 2 minutes, some guy or a woman is talking about this topic, and then you meditate and focus on your breath, and it's all a little more guided, which is great if you never did it before. And then there is this guided meditation with Joe Dispenza on YouTube, which Albert really likes and shares sometimes in the group, which is also great. It's more about manifestation and like reprogramming your mind, while Headspace is more mindfulness, bringing like the attention back to your breath and focusing on like not thinking all the time, which is also so different. There's different ways to meditate, and for example, I like also the Wim Hof method for my meditation because this brings me in a very calm and thoughtless state, and I can use this state to program my mind. In the same way I like the same states I reach with Headspace, but a lot more intense. And so there's many ways to meditate. You could also just sit down and watch water, for example, like really try to focus on the surface of water instead of thinking and judging and like analyzing and whatever your mind wants to do, just looking at it and being in the moment and just yeah, doing nothing more or less, just looking at the water. And so as I said, there's many ways, but it's meditation is always a practice of attention, usually on the breath or on your thoughts in some way. And I would play around with some different ones to see what works best for you. Will more topics be added to the white belt course? Yes, it will be updated. Right now we don't have any more topics we want to add. We try to like give the most amount of stuff in the course itself, like in the group mentorships, because the PDFs more or less cover everything we want to share with beginners. Of course, there's a lot of more things, and we all also talk, like if you ask questions, sometimes the questions are more advanced than we thought they would be for a beginner's course. That's why we also changed the name, because we just saw that it's not just a beginner course, it's also more advanced sometimes, especially the live sessions. And so if we have new topics for the PDFs and for the course itself, we will definitely add it. But right now we think we have a good solid base. What we wanna do in the next weeks is make more videos on certain topics, because with talking and showing and like live charting, it's usually easier to understand than with just reading PDFs. NOB behind the FEG is what makes the hidden auto block. If before the FEG, that makes us call the previous OB a hidden auto block. A wick that's a part of the hidden auto block, is the auto block still valid? No, call a partial breakable. So hidden order block and breaker block is the same. There's just different expressions. Normally or usually it's a breaker block. The hidden order block stuff I think is really made up by the whole monitor community. But usually we call smart money concepts usually call it breaker blocks, and a partial block, a partial hidden order block, partial breaker block, whatever you want to call it, is just like I showed you here, a touch block, but it has still this untouched area in the middle. Of course, the higher the time frame, the more liquidity is within this block. So if this 6 days touched, there's of course more liquidity still here than if this is just a 50-minute block touched from both sides. I would probably not be trading this anymore. But it could still react. A block is a block. And sometimes even small, tiny, partial, little garbage things give strong reactions. You would be surprised. So you can trade a lot of things, but focus on the more clean ones. Probably good advice for the beginning. On the meditation or attention topic, I might want to add, just don't multitask a lot of times and focus on the task you do. If you take a shit, be a rebel and don't look at your phone. If you eat and don't watch your video. If you go for a walk and focus on your surroundings. That's true. That's very true. And every single activity you do can be meditative, like eating, focusing on your chewing, on the taste, walking, focusing on every single step. Completely true. And then your whole life becomes one big stream of awareness. But be a rebel is probably right, because I'm sometimes not a rebel myself and I like to watch videos while I'm taking a shit. But you're right. Can you talk a bit about which one is the actual OP for this Xandom Doge before the big FVG? You mean this area? I mean, like, which is the opposite pole? This one. Yes. They're above. So, I mean, it's a red one, so it's not really opposite. But I can skip through 10 time frames right now, and then we will find one which has the opposite color. But the idea is not that it's exactly the opposite color, but it's the opposite side. Look, it's green now. And we just skipped it on this time frame. This one reacted. And here you should take in account, of course, which one is in premium or discount. And we will see that the upper one is not in discount of this whole swing, which then makes it less powerful, of course, even though the low one also did react, really. This one is touched on here. Yeah, no reaction again. And by the way, I'm not really a fan of taking positions at opposite poles. Oftentimes they are more or less the range retest. You see we had this little consolidation here around this pole, but it's more or less taken here. So as said, I'm not the biggest fan of poles anyway, but you can, so sometimes I use them for TPs or something. And if they align with a range retest, which are many people looking at, I don't consider them very strong. So if it's a real clean range retest, I usually don't trade them. But you can. And you can do so many things with risk management, risk to reward. Like here, you had this perfect retest, more or less. Perfect range retest. Here could also be an opposite pole on another time frame. Let me force my bias. See, opposite pole, more or less. It's the same color, but it's the perfect range retest. Perfect reaction back to the range highs, 11%. There's so many things you can do. You need, if you're really interested in which levels work best, you should backtest a lot and you should figure out yourself, and especially different assets react differently. But yeah, a lot of things work if you manage your risk properly. Each morning I go for a 20-minute walk just to talk to myself and clear up my mind. I call it active meditation. Don't know if it hits it exactly. I've been doing that for years and it's really calming me down. So if anyone has attention problems, this might also be something for you. Yeah, that's amazing, man. That's great. This is certainly a very, very healthy habit. I like to watering my plants in the morning, sunlight going out, and getting some fresh air, getting some real light in my eyes. It's not 20 minutes. Could probably extend that a little bit, but I love that. It's great. Found the level that raised this question. Please take a look. Yeah, this is tradable. It's a partial. The 0.5 of the block is not taken, so I usually consider it taken if the 0.5 of your green block there is taken, which is not. And the thing is, this just works if it has confluence anyway. So if, for example, BTC hits a 6-hour level, which is similar on a similar structure more or less, at the same time, I would probably trade this. So I would probably not trade this anyway, but if I wanted to trade this, I would take it with the BTC 6-hour level. And then my question again is, why would I trade this, which is probably more erratic on low volume, not offering a better RR, it's partial. So I will probably just go with BTC. But yeah, but if it aligns, this could be a great area to take a short. I like to talk a lot with myself in my mind while walking outside. Yeah, that's also great. Like actively telling yourself what to think is very powerful in my opinion. And seeing your thoughts as like someone you can talk to, like a conversation partner or something. I like that. You guys seem to have very little questions about the mental game, which I find very interesting. Because, I mean, I understand the whole structure stuff and the technical stuff must be understood as well. But I think many people probably understand what they should do and what they shouldn't do. But the biggest problem is that they are not doing it at the right time and rather doing the opposite or sabotaging themselves. That's why, yeah. For example, I think one of my biggest advantages, to be honest, or why I became very quick profitable, is because I focused so much on my mental game. And I'm never the perfectionist type of guy. I'm rather the opposite. I just get things done and look after if it's correct or not. But I focused a lot on my mental game and I learned the whole technical stuff along the way. And with my mental game in check, most of the time, I'm of course not perfect. Everything was so much easier because, once I've learned something new, I just implemented it and didn't sabotage myself. And every new knowledge didn't confuse me, just became, I added more to the puzzle piece. But if your mental game is a mess, everything can just more confuse you. And for example, I oftentimes also talk to people who trade for a while longer, a few years already sometimes, and they learned so many things, like trend lines and ranges and trading with RSI and trading with MACD and trading this and trading that. And so they're so overloaded with informations that they don't know what to trade. But if you, for example, have your mental game in check, this can be an advantage because you understand what everybody learns when they start trading. So if you not started with Money Tower, for example, I started learning trading with Lucky and Money Tower from the beginning. So I never really learned a lot of things that you learn from the retail side of things, and this can be very powerful. I found because if you understand what retail is thinking, you understand where the liquidity is, right? Because you understand, people will go long here, short there, which means you know where the stops are. So this is a big advantage. So I started to learn those things to understand what they are thinking. And this doesn't need to be a reason for confusion, but of course, your mental game needs to be in check for that. I'm not sure how familiar you're with Lucky Chart 8, but I've been in this Discord a little after I started out with all this trading stuff in May, and man, he drills that into the soul. Okay, I just mentioned Lucky. Yeah, so he was also a big teacher of mine. I studied all of his X content. He made a lot of live streams when I started trading, which was great. His live streams are really gold. And I learned all my order flow knowledge and everything from him. And as said, I took probably one trade before I really started studying Monitor and Lucky Chart Ape, and he drills that into your soul, all this risk management stuff and all that. So this was never a topic for me. And I just needed to learn how to read this chart properly. And once I did that, I just needed to be disciplined. And it's so funny because all the knowledge is out there, right? All the knowledge, and it's really the... So I have no secret sauce right now. So I tell you everything I know, but if you being profitable or not will not depend on how much knowledge I give you. It will depend on what you do with the knowledge. And so, as said, I think the mental game is the most crucial part of everything. Of course, in the beginning, you need the technicals, the fundamentals, the basics to understand what really moves the market and all that. But then it's really all about the mental game, in my view. This used to be my problem. I knew a little bit of every style of TA. This is the first time I focused on one style. Monitor, it's made my life so much easier and better. Yeah. Strategy hopping is a big problem for many. As I said, I talked to a lot of people about that. And this doesn't need to be like a disadvantage. It can be used in a good way, because the whole edge is based on something. And I mean, you should just trade this edge. But if you sometimes think about and look what people doing or thinking that are not aware of those things, like what was the first strategy you learned? But the first one, the most easiest one on YouTube, like learn trading in 5 minutes or whatever, and then they gave you some indicator and something, and then they said you do this and that, RSI, do this and that and blah. And while those strategies can work as well, if you're disciplined and if you have a mental game, I mean, I've seen breakout traders with a 30% win rate making a lot of money. Why? Because they executed right. But a 30% win rate is not fun. I mean, if you get beaten up all the time, sticking to the strategies is incredibly hard. And so people start looking for next one, and in the end they learn 6-7 strategies and they hop around from one to the next. So if you lose 1, 2, 3 times, you hop around to the next, and I need to change something and that. But usually it's not the strategy's fault. And a lot of strategies can be profitable, but not a lot of strategies can be traded. And I think the Money Tower Edge itself, and the whole breaker block style and everything, it's first of all, it's pretty understandable. It teaches you the real knowledge of the market, what really moves the market, and trading the best reversals. And the monetary refinement of this whole edge is like the next level of refinement, like those tight stops and being able to predict so many things in advance is years of refinement, but he started himself somewhere. Look at his old charts. He used trend lines. I also saw charts of him using MACD, RSI, some things like that. But then, of course, you learn, okay, those things work only in a certain way, and most of the time they're there to trick people. Trend lines are there to create liquidity. 1, 2, 3 bounces usually work on a trend line, and the fourth one is a smash, and taking all the liquidity of those people who saw this trend line on the third bounce. And so everything works to a certain degree if you know how to use it. And the more styles you know, the more you know about the market, the better. Because with all this knowledge, you then understand what's going on all the time. When is liquidity created at what area of the chart? But of course, you should just stick to one. And if different strategies confuse you and looking at all those different things, just do this one thing, mark out those levels, and you can add more and more knowledge and refinement over time. And this is what I also mentioned in the beginning. People start more or less with the most refined edge you can find without knowing all the basics, which can be hard because playing on such tight stops and everything requires a lot of knowledge and execution skills and mental game skills. So sometimes it's probably better to go a little wider, be more relaxed. Oh, it's just a 3R. I mean, it's still 3R best case, and it doesn't need to be a 10R all the time. And this is what I think people should also work on, like the base and understanding that this is a really refined edge, and if you can't execute it from the beginning, this is really no shame. Just the refinement comes over time. Me right now is predominantly learning monitor, but with a part of Zero Equals teaching incorporated. I've never looked at Zero's content, so I can't tell. But I heard he also knows what he's talking about. I think there's some overlap. Not overly familiar with Zero. Yeah, same here. Sorry, I'm late. And if you already covered this, I will rewatch the beginning later. 2 times now I've missed the buying spot in deep discount, trapped in analysis paralysis, waiting for lower. How do you think buying spot, and when I'm waiting to enter, where do you consider stop loss for spot? So how do you think about buying spot and when I'm wanting to enter? This is all about context. And let's take BTC as for example, because in the bear market, there was no real clean level from here. So it was more or less some out of nowhere, basically. So the opposite pole got like skipped. But from this point on, below 20K, you definitely wanted to scale in, just because so much of this move was retraced and the fear was high, shorting was high. Usually it corrects around 80% or something. So, and the funny thing is, if you feel paralyzed, if you feel fearful, just buy. Your own emotions tell you to buy, more or less. This is your best indicator. If you don't want to, it's usually, not always, a good time. Same on ETH here. Ugly structure, breaking this low, sweeping this low. Damn ugly structure. And I would have probably cut if this would have been lost. And it's a tough one. It's difficult. Scaling into spot is also no easy task. But after 60% correction, there's definitely a reason to scale in, especially considering this whole demand area here. So this is also a very individual thing, because it depends on the ticker you're looking at. It depends on so many different factors: how much money you have, what is your goal, how big is your portfolio, so many different things. But scaling in when fear is high, and in the end, look at this move. It doesn't really matter if you bought for 1900, 2000, for 1500, for 1400, and maybe if you bought for 1.1k. Of course, if you bought from way down here, the performance is even better than from here. But would you really care? Like, for example, if you don't buy and look at this, it's probably really painful. But if you just bought within this area somewhere for around 2K, great. And then you have the psychological level, it broke, blah. There's so many things I could talk about right now with Spot. But generally speaking, and a very easy rule is just if you're fearful yourself, it's usually a good buy. If you feel other people are fearful, sentiment is bad. And also funding rate is a great indicator. If you look at funding rate on the daily, every time it went negative, it's usually a good time to buy. And according to the whole context here, like retracing is so big, and then if you understand the macro situation and can put everything a little bit together with sentiment and all that, funding rate went negative, you just knew that this is a good time to buy Spot. Yeah. And then another great example, I got another great advice in my opinion is don't listen to too many people, because everybody's saying something else. Some people say this, some people say that. Everybody has a different bias and nobody really knows. Look for a few people who seem to be on track most of the time. There are some people out there who nail higher time frame moves almost perfectly most of the time. I also caught this one quite great. I'm pretty happy with my performance on this move, and also on BTC where most people were still bearish. Also in the community, I was very long, very good exposed, because I've just seen this over and over, and I focused so much on higher time frame spot play. As I said, at my first 3 years, I didn't even focus on trading at all, but I really studied the whole macro and all this, like the more or less the boring stuff which people usually don't want to do. But I spent so much time with that the high time frame game is more or less my easy money game right now. And as said, don't listen to too many voices. Nobody really knows. Make your own analysis, look at your own emotions, and be brave when it's time, and be brave also when selling, because it's usually also hard to hit the sell button. Especially if I look at, for example, if I look at sentiment now and what everybody's talking and targets and blah, there's always a reason why not to sell, like there was always a reason why not to buy. Yeah, like man, I just bought ETH there because I saw Ben Cohen saying it goes to 500 when we swept those lows, and I felt like shit myself. Yeah, that's exactly it. You look at it and you think, oh no, damn, it's breaking down, it's going to 1K, I'm losing all my money, whatever. It's usually the best time to buy big. And this is by design, and I'm always fascinated by this because I would consider myself a pretty aware person of my own emotions and pretty in control of many things. And I still have those feelings. And I use them as indicator. Right? Just because you think something doesn't mean you need to act on it. And there is the sentence, I think I talked about this before. Trained mind can play with the thought, but doesn't necessarily need to believe it. On the mental side, how to overcome analysis paralysis. I used to have it in decision-making, execution, following too many people, and not making my own plans. This is point number one. If you don't have a plan and just listen to another guy's plan and the plan is not working out, the first thing you probably did was opening X and looking for another plan from somebody else, which then maybe wasn't there, and then you were confused and all that. Making your own plans is really the most important thing. And then mapping out different scenarios. Really learn probabilistic thinking, because why would you paralyze if you have several solutions already in the back of your mind? Or not solutions is probably the wrong word, but more options, outcomes, probabilities, possibilities mapped out in your mind. Then if your most likely one didn't play because maybe your analysis was not on point, you missed something, whatever, this will not shock you, because first of all, you always have some invalidations in place, and you always should know before how much money you can lose, and you should always be comfortable to lose that amount of money. So what would paralyze you if something goes wrong? Because first you thought about another outcome, you're not convinced, that you're not thinking certainties. And so, okay, something else happened, that's great. I lost some money maybe if I'm wrong. Okay, this is the amount of money I was willing to lose for this idea. So can't shock me either. And third, everything you made, this whole plan yourself, so there's no reason to be paralyzed. You just switch to another plan. Maybe you feel like, oh no, damn, this didn't play out. Oh no, my second plan also didn't play out. Something completely else is happening. But if you really train in probabilistic thinking, this won't shock you. Why would it? Yeah, you got it wrong. Okay, if I don't look at the weather forecast for tomorrow, and I say, okay, good, tomorrow morning probably the sun will shine tomorrow, and I look out of the window, oh, it's cloudy, damn. Yeah, is it that bad in the end? Or I thought, okay, maybe it's cloudy, maybe it's sunny. Okay, tomorrow it's raining in the morning. Okay, bad. If I plan something to go outside, okay, bad. Maybe I get wet, maybe I can't go outside. Whatever it is, I thought about something which I can't control, and then there is an outcome which I haven't planned for, but that's why I manage my risk. So in the end, I'm always prepared in some way. So there's really nothing that can shock you. But as you said yourself in the first sentence already, and the second, making your own plans is so important. And I really like to use those arrows, for example. I do this a lot with my mentees, not because I think this error will happen for sure, but to map out how many different possibilities there are. And I can do this like for 2 hours, right? I can play around with those arrows forever. And in the end, I have like 20 different ideas mapped out. And each of them could happen, but only some of them make more sense than the others. Why? Because the market behaves always in a certain way, and if you understand that, your analysis gets better and better and better. You see how many different paths from here could occur, and you just map those ideas around key levels, psychological levels, liquidity levels. And then once you see, okay, good, this is not very reasonable, this is not like a real analysis right now, I'm just playing around. And then I say, okay, good, this is still reasonable. We probably won't go this high. Let's eliminate this idea. And then along the way, you validate or invalidate certain ideas. Like, for example, I have mapped out this. Since here, I have mapped out this. It followed the arrow perfectly. We moved off my arrow here a bit. But overall, I don't see it really invalidated, even though my idea wasn't perfect. This is more about timing than about price. And should we just move high from here, my idea is invalidated. Should we just break low from here earlier, my idea is invalidated. But I'm always aware that I'm probably not 100% right. I make my own plan. And if my plan fails, I have either a second plan, I have an invalidation in place, and I can just plan something new. And of course, in the beginning, you will be more wrong most of the time. And to be honest, if I plan things out like that, I'm also more wrong most of the time, but I'm still ending up making money. And this is all due to position management, risk management. And of course, my whole analysis gets more refined and gets better over time. But for example, I do this sometimes with mentees when we do live trading or something. I map out 20 errors, and then in the end, it doesn't even follow one single error of mine, because that's just something completely else. And this is just the reality of the market. You can plan, you can make, you can do, and in the end, the market does something completely else. And the sooner you accept that, the easier and the better for you. But yeah, I would train your probabilistic thinking, and those errors, like I show you here, they are great. Map them around key levels. Think about, for example, you can do one proper example. This was just playing around. But let's use this one because the levels are marked out. So let's remove some stuff. Okay, so we have some key levels here. We have also the daily one, which I removed right now. But so we could reverse from here into this level, right? And then we go for this. So we could also nuke from here into the daily. and then do this. Like for example, this. Now let's mark it out like this. We could also not go or not react on this daily, but just skip it and go for the lower one, or go for this one first. And then we go for this supply again, and then we could go lower. We could also go from this supply, we ignore it, and we then go higher, and then go here. So you see, it gets, of course, the more I make this, the more confusing, or the messier it gets. But my point is, there's so many things that could happen, and just a few of them make more sense than the others, and you should wrap around your ideas around key levels. And to be honest, it's fairly simple. You have few options around key levels. Either you have a reaction. Doesn't matter if bullish or bearish. You have a key level, it reacts. Okay, then you're in a position, best case, and if not, nothing is lost. Then you have the second option. It's not reacting. It just gets smashed. Okay, worst case, you take a full stop. Best case, you manage your position properly, you get early signs, whatever, you take a partial stop or a stop loss at break even, because there's only a minor reaction. And then you have also the option that you go to the level and you just grind sideways forever, longer than you expected, and it's just happening nothing. And it's just those three things, up, down, or sideways. It's not that difficult. And then if you know all the key levels by now, and look at those key levels, and think what could happen. We blast it, we react from here. I want to manage my risk around this level, and if this fails, there's another key level, higher or lower. But in the end, as I said, you can mark out 20 different plans, and it's plan 21, which we didn't plan for, especially in the beginning. The market tends to do that with people, and that's why people get so frustrated and so confused. But this is really no shame. The market is designed in that way, so don't feel bad about this. See it as challenge, see it as riddle, as puzzle. And as said, probabilistic thinking is really the key here. But I haven't even read your whole question. I have overcome this. Now my issue is trying to decode the whales and not getting emotional when everything is up. I'm getting better, but I'm recovering a small cap backholder. But I'm recovering small cap backholder. I got very good at it, though, to break ingrained habits. Hence the question is on TPing earlier. I don't understand the last part, to be honest. You're a recovering small cap bag holder, so this means you have still those small cap bags and you still hope that they're going to break even again, if I'm correct. Just tell me if so, because this is also messing with the mental game. If you hold on to bags which are deeply underwater, this is really no fun. And to be honest, this is more like red poison, tying you to the spice of, oh, I need to recover this, which is always affecting your analysis, if that's the case. So if anybody still has those bags and you find yourself often paralyzed or confused or being too bullish, it's probably because you still hope in the back of your mind that those the small cap or those bags recover at some point. And while I won't tell you what to do with those bags, for example, I had this situation as well, and at some point I just decided to just cut them all, some in small profits, some in losses, some in big losses even. I didn't care, and since then, or after that point, my whole analysis got so much better because I was just not so biased anymore, and the hope was gone, and this red poison was not wearing me down all the time. Different plans, probabilistic thinking, different plans, your own plans, do that. It's very important. Of course, look at people which you think trade well and have a certain style which you like, but still make your own plans. I also tell this to my mentees very early on: make your own plans. I can send me your plan, whatever. I can tell you if I think the same way or not. But even if I don't think the same way, I could be wrong as well. So even the best market performer could be wrong at times. Why? Because it's all probabilities. If you're not controlling the market, it's still probabilities for you. Even if you have a 90% win rate or 90% win rate of being right, let's say, with your ideas, it's still probabilities, and you could still be wrong, because that's why even like professional traders and the best traders in the world manage their risk, because other than that, you could always go in on every position, but this is just not the case. I made a big mistake this cycle. I tried to help a few friends, accepted to take their money and trade for them. Made a lot of profit in the first part. Some wanted to hold forever. Instead of saying it's enough, I let myself influence by them. I lost most of the profits, took some heat from them, but then recovered everything and made some extra profit. I decided that market is topping and cashed out. Everyone exited on, plus then started to envy. Exxon made 100, 11 made 50, and said only 30. Amazingly, I was the only one who made like 10% or less, and I managed to run through my entire portfolio. Since then, my mental game collapsed. I felt depressed, useless, etc. I felt like shit. I'm still trying to recover myself mentally. I think I did this so poor for myself because I tried to cover with my money if their positions went to shit. A stupid mistake, anyhow. I hope someone will learn from this. I would also not take money from other people to trade with. The amount of pressure you get, especially like taking money from not experienced people, is probably not a lot of fun, because they will always getting emotional and annoying you if they're fearful, or if they're euphoric, influence your decision making, like you said. If you also covered their losses, I mean, that's very nice from you. But of course, if they invest with you, they need to accept what happens to their money. I mean, if you go to a fund and they lose your money, they will also not give your money back. But it makes you a good friend. So anyway, I see why your mental game is affected by this. But think about this. You still ended up profitable in a market where 90% are losing money. I mean, this was what you see in the internet is all bullshit, because as said, 90% lose. And if you're able to be profitable in this market, and might it be just 10%, it's still better than 90% of all people. And you're still winning, more or less. And there's so while I say there's no reason to beat yourself up, I understand why and what's going on probably inside of you. But as there's really no reason to beat yourself up too much, because you ended up profitable. It's a hard environment. You made it yourself even harder by trading with other people's money. You still ended up making a profit for them. There's no reason to beat yourself up. You can be proud of yourself. And also a thing is, sometimes we have this weird conception of, oh, I did this wrong. I need to be like angry with myself, or like criticize myself. But I think this is really not helpful. Usually if I have like a loss streak or something, sometimes because of my mistake, sometimes because the levels just didn't work, and I beat myself up, I make it even worse, because I bring myself into a place where I try to prove myself. I still have it. I can make this, and from this pressure, I make more mistakes usually, and this doesn't help. Sometimes it's by now it doesn't happen very often, but I know this is the mental game part. Those things are the things that usually hold people back. Most of the time, it's not knowing what to trade and how to trade. It's usually those little things that are often overlooked. And so try to be proud of yourself. Try to see that you still won in the end, because you did. And as said, even in this harsh environment of trading with unexperienced people's money, you ended up being profitable overall. And so this is really not something you need to feel bad about. More about the mindset of being a holder, getting emotional at the top, always looking for high instead of TPing. Now I TP, but not enough, and I have the bad habit of always hoping, being greedy for more. This related to leverage trading, but now but habits linger from small cap gambling. Yeah, I mean, seem to know where the issue is. And if you know where the issue is, you can work on this. The question is, so this is the symptom, right? So your symptom is to hope for higher prices, to not TP enough. But the root cause is probably something deeper. And I will just go into this a little bit. But this is also where trading gets really personal, and I'm not quite sure if I can do this right now because it's a group. But just so much, oftentimes it's the root causes are in our core beliefs, and if you still think this is the only way to make money, of like hitting those high numbers, hitting those big gains, this is probably the reason why you have those symptoms. And you need to probably work on the root cause, which is you don't trust yourself that you are able to take another winning trade. So we usually hope for more, or that this trade is going to pay us more, because we fear that we cannot take another winning trade. And you need to overcome this and see that those small wins compound. So if, for example, if you make 1%, or let's say you make 2% a week, this is 8% a month. And 2% a week is really not that bad, is for example, and really not that hard. For example, if you take one trade, which works, it's just a very simple example. You take one trade that works, you risk 1%, and it's a 3-4 hour trade. You TP at 50% at some point, and you make 1%. So not a percent. No, you. Let's say it's a 4-hour trade. You take 50% TP at your first TP, and then your second TP. So you end up with 2R. A 2-hour trade is really not that hard, and you made from your 1%, you made another percent. So you make a 2% gain. Right? So you have 1R risk, 1%. You make 2R, 2%. And you make this every week. Then you have 8% a week. I don't know the exact numbers for 8%, but I know for 10% a week, which is 10% a month, sorry, which is around 60% a year. You in 10 years, you're probably a millionaire. With a 10K account, you're probably a millionaire in 10 years by just trading 2-3% a week. And you need to understand those compounding gains. And this is really what is trading about. You need to understand the math behind the whole thing. It's not one trade that makes you rich. It's not 2 trades. It's not 10. It's probably not 100 trades. It's 1,000, 5,000, 10,000 trades compounding over a long period of time, which is going to make you rich. It's very exponential at some point because you compound your gains so much that the curve gets steeper and steeper. But especially in the beginning, it feels like no progress at all because the curve is very flat. And of course, we have those setbacks. We have like drawdowns, whatever. It's not that clean like the whole statistical thing. But this is what helped me with this habit of like hoping for a moonshot and buying like crap. Or like, for example, I still like trading high volatile stuff. I also like trading stocks that are like down 90% or something, but the company is still solid. The narrative is nice. It reaccumulated for like 2, 3, 4, 5, 10 years. And I think like a 10x is possible, but I'm still not the guy who waits for this 10x and writes it to zero if it doesn't come. But I have my clear validation. I take profits on the way up. I ladder out my profits. I try to add when it makes sense. I try to cut when it makes sense. I treat it as a trade. But of course, if there is higher prices possible, why wouldn't I try to catch it? But I need to be disciplined if structure turns against me to just cut it. And if it's just, instead of a 10x, it's just a 2x, a 3x, which I made in the end with the whole bag, that's still an amazing return for one position. So yeah, those small compounding gains. And for example, these are smaller positions of mine, which in the end, still, if it's a 3x or something, it still adds only 5% or 10%. Or if it's a bigger position, maybe 20% to my portfolio, which doesn't sound much. But as said, those compounding gains over the years, they get so exponential. Keep that in mind and recall that if you feel greedy. Anytime. anytime. I'm very glad, to be honest, that you guys gain so much out of this course and out of the live classes and everything. We are very happy that you are happy. If you make 5% a week and compound every 4 weeks, you will make 10x a year, if I'm right. I'm not quite sure about the math, so I'm not the biggest math guy, but there's calculators for that, or you give your you can type this into a ChatGPT and it will tell you if you're right. But yeah, gains compound very much. I mean, 5% a week is a crazy good performance, means 20% a month, which is probably a little bit unrealistic considering that the best traders in the world make 100% a year. Most just so 50 to 60% is already a very good performance. And I mean, hedge funds and big funds only achieve 10% on average a year. So 5% a week is probably elite level. For example, I aim for 10% a month, and I reach it at times. But I know that I won't reach it most months because 10% a month is really a good performance, as so on my whole trading account. And not considering spot, because if I add spot at some month, I exceed this by far. But just trading wise, and I like to aim for the stars to reach the moon, and so 10% a month consistently is my goal. And if I reach it, I'm very happy, and if not, I'm not devastated because I know it's just it's a high goal. But if this, for example, stresses you not achieving a goal, I would aim for 5% a month, which is still a great return trading wise. Doesn't sound much, but as I said, this compounds a lot. Thanks, brother. That makes sense and hit home for me. The confidence part on knowing I'm going to take many more successful trades and I will win by compounding small wins. Exactly. That's the right mindset. Okay, guys, I think we wrap it up for today. Any more questions left? Yeah, and I think we do this more often, this kind of style of lessons. If I have a topic for next week, I think next week is going to be our last class with me. We talked about maybe giving you a bonus class because you're the first ones and we had some technical issues and all that stuff. We will probably add one at some point, maybe a little more spontaneous next week or something. Yeah, and if I have a topic for next week, I will talk about this anyway, and we cover the market and all this like we always do. And if you guys have some topics during the week, either write them into the discussions channel or let us know during the stream. Yeah, because I think from this point on, it's best to let you like tell us what you need, or tell me at least what you need, and we will talk about this in the next two that we have. And also for the guys watching the recording, if you have questions and you can't attend the class, make sure you ask during the week or let somebody know about this topic. Best you tag one of us, so we can cover this topic in the live class, even if you're not here to ask yourself. Okay, guys. I think that's it. You're all welcome. I wish you guys a great rest of your day or start of your day, whatever. and we talk next week. Bye bye.